Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend, wie geht's? For those of you who are new to us, we are the TSTW 24 traders. The title of this video is how to count Elliott waves on the 30-minute chart, alright? We are recording this video today because a TSTW24 trader has contacted me this week about wave count on a 30-minute chart trading the Australian dollar, US dollar currency pair. All right, so we're going to use this situation to show traders how one can count Elliott wave on a 30-minute chart, because the trader want to know whether she has labeled correctly the first wave. I received 2 or 3 emails from this trader. All right, so Joyce, we have received your email and now we are recording the video. Before we continue, I would like to encourage traders to watch the full length for this video, because I'm going to highlight some important trading strategy, the thing that you need to pay attention to, okay, if you want to count Elliott wave on a 30-minute chart. But the approach that I'm going to use what we call a top-down trading approach. So suppose I want to count Elliott wave on a 30-minute chart or 15-minute chart or daily chart, I must use a top-down, wave count method, top-down trading approach. Because if you go directly to the 30-minute chart counting wave, you can quickly, make a lot of mistakes, By the way, I do not reply to the email to this trader. One of the reasons is that, Joyce, if you want to contact me on Gmail, you have my Gmail address. If you do not, I will send you this video to my Gmail account. Note down my Gmail email account, And also, when you are contacting us, like you are doing now, you say, I'm trading Australian dollar, so write Australian dollar, the time frame, and plus the chart, Very often, I prefer traders to send me a different time frame, all right? So let's continue. How we count Elliott wave on a 30-minute chart. As I said to you, I'm going to go, step by step. Why, I did not reply to the email straight away. Now, one thing that I do not do at all, I don't give live trading recommendation to traders. If a trader is trading, asks me for my view on a live trade, I do not reply. I do not do it. Because why? Because I believe that a trader can find out slowly by gradually the best approach to trade. I concentrate on the trader. I don't worry about what is happening to them. I'm more concerned about the learning curve of the trader. So do not think that sometimes traders think that show them disrespect. It's not disrespect, because I want traders to be able to make decisions by themselves. So if you send us email, very often TST trader will send me email. I will say to you, I'll get back to you in 2 days. I don't reply instantly. If a trader is trading, ask me for direction. I don't do it, I don't do it at all, because money is involved, and I'm not allowed to do that kind of recommendation on a live chart, But I will send you another email and I will do other recommendation for you. But do not be discouraged. With this video, you will improve, your wave count. What are we looking for? What is the guidelines that we are following? All right. The guideline that we are following is very, very simple. Sometimes the wave count can be very, very challenging. So if it's too challenging and you are not sure, or things are a bit complex, especially if you are a new trader, you may decide to stay away from it. Very often the wave count is very easy. It can be you can just look at it and know that this is the 3rd Elliott wave, this is the 4th Elliott wave, all right? You can see it clearly. But if it's becoming too complex, just put it aside, draw your channels, and you will be all right. The market patterns. When we are counting wave, we should not violate the market pattern. So if you want to know whether, okay, this is the first wave, what is the characteristics of the first wave? The first wave must break resistance on the left-hand side. Very often, you will see, if you want to know whether, we have a video at 24 Elliott wave, okay? YouTube channel about the first wave, the characteristic of the first wave. So very often you see a price goes down, okay? And then very often we see a consolidation, which is the horizontal market pattern. And the first wave, very often, this is my guideline to traders, very simple. I want to see a downtrend first, and I want to see a consolidation. This is the common pattern before we see, okay, the first wave breaking out of the consolidation zone. And we must look on the left-hand side, and the first wave must break resistance on the left-hand side. Looking on this side, the first wave is the signature of the bull in an uptrend to break resistance on the left-hand side. All right? Now, okay, let's go now. Joyce, stay with me, all right? Everything will become clear to you now. As I explained to you, the mistake that we can make. So suppose now I'm going to go to the 30-minute chart, okay, because that's what you are looking at. All right, so you are on a 30-minute chart, okay. Here it is, we are on a 30-minute chart, Australian dollar, US dollar currency pair. So if I'm counting wave on a 30-minute chart, okay, I will draw my channel. It just because everything else that we are using, if we use them, trading system, trading strategy, anything else, if we don't draw our channel, we can make a lot of wrong mistakes. So I'm just drawing something like this to highlight this channel, okay? Can put it here like this, but I'll put it here, okay? So we have a channel there on a 30-minute chart. Now we have another, okay, draw it roughly like this. I can put it like this, okay, but I want to include this section here. So, and I can just draw another line here, make it parallel, roughly. Okay, extend it a bit, okay. All right, and now we have another channel here again on a 30-minute chart like this. All right, stay with me. Excellent question, by the way. So do not be discouraged, okay? Just do not be discouraged. All right, so now here we have the channels, okay? So let's focus on the channel for a while, okay? So the price went up bullishly and then pulled back. This is not, so the prior move was very bullish, and then we have a pullback that did not cancel the first move. All right? Okay. Now we see this channel price going up. But this move here, the third channel here, is not very, very bullish right now. Why? It's not very, very bullish. Because it didn't go above, okay, this level here. You see, it went above it a bit, but you see, found a resistance here. So though the price is in this rising channel here on the 30-minute chart, the bullish momentum will become very strong if the price finds support above this move here. So we can say, somebody may say, oh, okay, bullish move on the 30-minute chart. Okay, are you with me? All right, we can say bullish move on the 30-minute chart, followed by, okay, a bearish move. Pay attention to the red lines. All right, and the bearish move did not cancel the first bullish move. So we will say this is an invitation to buy. We can look for opportunity to buy here. Here we can look for opportunity to buy on the edge here. That's not a bad place. But it should run fast. So if you buy here on the 30-minute chart, you see the price break above this declining channel here, the second channel, and retest it here. This is a beautiful place to buy. If you buy here, your first target is near this resistance level. All right? Okay? So using the channel alone, I can make excellent decision. Prior move bullish, second move bearish, but did not cancel the first move. Now continuation. Well, but this resistance here, this is so important, the previous high. It's going to be very bullish. After it start going up here, it must find a support above this, I'll color into pink. All right. Must be Okay, price must go above it and find a support. It went above it and quickly. So right now on this 30-minute chart, if I want to label something, okay, first wave, it will be this one. Just looking at the 30-minute chart. So if you are a more experienced trader, you will bang the table, you will smash your computer, think that, Joel, are you mad? But we are talking about just somebody that is new, counting the wave on a 30-minute chart. So without looking at any other time frame, because I want you to understand this. But we do not want to count Elliott wave using one single time frame. All right, we want to use many time frame. Quickly, all right, before you get tired with me, if you want to count wave on a 30-minute chart, you can, if you don't want to look on the daily chart, weekly chart, yearly chart, as I'm going to do here, you may decide at least the 4-hour chart. Start from the 4-hour chart. Same thing, I recorded a video, I think at 24 Elliott with 2 channel. You want to combine the 4-hour chart and the 15-minute chart. All right. All right. I would prefer to combine the 30-minute charts, okay, with a different time frame, okay. But okay, if you don't have at least 4-hour chart, start from the 4-hour chart before you bring back to the 30-minute chart to count the wave. And you see here we cannot talk about the first wave, okay, in this session. It doesn't make it any. It doesn't add up. And also it didn't break any resistance, so it doesn't work perfectly here. So this is not first wave. There's no first wave at the time when you were sending me the email. By the way, let's look at the email. Beautiful email the trader was sending me. I'm sorry, okay, meant to also attach this D1 chart. So she sent me one first email, and she's sending me another email putting the D1 chart, okay. So the next email, would you please tell me if you believe I have labeled this correction pattern on the Australian dollar, okay, D1 chart correctly. Thank you for your help. Have a fun day, okay? Beautiful email. Now, the third email, would you identify for me the start of first wave here, okay, to the upside? I have highlighted in yellow the area that the breakout occurred, and I'm not sure if that should be counted as one or the next breakout point highlighted in green. Thank you, Eva, so much. I'm enjoying using the TSTW24 system, Joyce. So these are the emails that the trader sent to me, okay? So you see now, so we want to start first with the market pattern, whichever time frame we are in, and the progression of the price, as I show you, the downtrend first, consolidation, and then a breakout, resistance on the left-hand side, then the first and nearer resistance on the left-hand side to be broken bullishly. All right? Consolidation, all right? If I'm looking at this 30-minute chart, okay? At this point in time, suppose I'm somewhere here, okay? There was a bullish progression. You want to see what has happened before. There was a bullish progression, and then the price went down, okay? So we want to see what's happening. What is the dominant force? The dominant force is bullish. So on this 30-minute chart, I will say, suppose I'm talking about chart pattern, I will say there is an inverted, a dodgy, or okay, a bit funny, okay, inverted head and shoulder here, okay, in this zone, which is bringing me again here. So price was in a decline channel, breakable, retest. Yeah, this is a nice, low risk entry point. Looking at what has happened already, it looks more bullish than bearish, but the bullish momentum will be confirmed if we go above the prior high. Remember, Joyce, when we are counting wave, okay? We are doing like this, okay? So the normal pattern that we see is this. But we want to work together with the market pattern. This will save you all kind of problem like this, okay? Now, so we have a first wave, second wave, okay? For the trend to continue, this resistance here, the high of the first wave, must be taken out by all means. It must. Otherwise, the trend is not going anywhere. So here, as we are stalled here, so far, there is a big question mark on this bullish progression. Okay? let's remove my drawing on a 30-minute chart. And now we're going to go to the daily chart and see the bigger picture. So I started with somebody who started counting wave on a 30-minute chart, going directly to the 30-minute chart, and okay, at least drawing okay the channels to dictate okay the hotspot trading zone where the risk is low and the reward is high. Okay. All right. Another thing I will say to you, Joyce, is that even if you made a mistake, okay, counting wave, do not be discouraged. But one thing you do not want to do is to violate the market pattern. All right. And I think what you have done, as I'm going to show you here, your decision was not, what you were saying was not wrong. You are not wrong, because the price is at a support zone. I admire that, at least. Okay, I admire that. Because you want to buy at the key levels. And the Australian dollar at this point in time is at very important key levels. I'm going to show you that. But let's go first, okay, to the daily chart, okay? I'll go to the daily chart, then I'll come back to the 4-hour chart, and we will go over it from there. Look, on the daily chart, what do we do? Again, every time I come to any time frame, I draw my channel because they will not fool me. And you see, so you see the blue line that I draw on the daily chart for the Australian dollar is not bullish. It may be now it's not displaying lower lows anymore. So, but it's still below this bearish trend line. So if we are bullish or we are talking about fast wave, we need to be careful because you see this trend line here is stuck below it. So though we are at a support level, as I told you, the place where you are buying, yes, it's a beautiful support zone, but this trend line is still okay on top of this bearish move. So it's just slowing down here. So on a daily chart, the price below the bearish trend line, and also we have a kind of consolidation here between the first pink line. Now I have a 2 pink line. Let's go to the 30-minute chart. I want to remove. Yes, that's the one I want to remove, this pink line, because I have another pink line there. And I'll go back to my daily chart. Okay. All right. So we are below the bearish trend line. So though we are support level, we need to be careful. I will not start talking about first wave in this condition. I will not. I will not even mention it. It's below the bearish trend line. You see now? So start from the higher time frame, draw the lines, you see now? So in fact, the price was approaching, so a resistance zone here, but there's a support here, beautiful support here. Okay? Draw the channel, draw the trend line from the higher time frame, and then go to your 30-minute chart. And suppose, okay, Joyce, we were here, and the price break above the blue trend line, and now retested it here. Okay, you see now? So we will say that the bearish momentum is stalling. It's out of the bearish channel, retest it here. So we will be watching this zone. So normally, you see, it went down, now it's consolidated here. If you break out, you may say, okay. So this resistance, if the breakout should break this resistance on the left-hand side here. So you may say, okay, breakout, okay, first wave, retest. But again, if I'm doing that on a daily chart, don't forget, I will not, if suppose I'm continuing the wave on a daily chart, I will not stop on a daily chart. Now I will go to which time frame, weekly chart, monthly chart, even yearly chart. The same thing on the 30-minute chart, we want to count wave, we go 4-hour chart at least, or at least daily chart, okay? So if I see this on a daily chart, I will just forget about wave count at this point in time. I will say, well, I'll wait until it goes above the blue line before I start counting wave. So at this point in time, it may be the first wave going up now, but it's for me, it's too early. And also the market pattern on the daily chart, we have a consolidation taking place here. 1, 2, 3, 4, 5 traders are selling here, and they want to bring it, and we will see whether it's going to continue to come out. You can wait patiently, but anytime you want to enter the trade, select the best low risk entry point. Okay, now let's go to the 4-hour chart, as I promised. Okay, so on the 4-hour chart, The same trend I will draw on a daily chart. So suppose I did not draw it on a daily chart, remove it now. So I draw my thing on the 4-hour chart. So somebody combining the 4-hour chart and the 30-minute chart for wave count purposes. Yeah. Again, we are below this trend line. Okay. All right. Suppose you did not draw it like this, and instead, okay. 1 second, please. I hope, Joyce, you are not angry with me. All right. I hope you are not. You are not. Okay. All right. If you were, you were not. You won't send me 3 email. You forget me and ignore me completely. So, Joyce is a TST trader. So, okay. All right. So now, suppose we draw it like this. Okay. If we draw it like this, so okay, not bad. Suppose you did like this. Okay. Now, okay. So we have a bearish trend line, okay? Now the price is above it, and retest it here. Okay, probably, okay, here, all right? So somebody may say, okay, the first wave is starting from here. Well, it's not a bad decision. Why? Why it's not a bad decision? Because on the 4-hour chart, somebody counting away on the 30-minute chart, okay? Now switching to the 30-minute chart, we'll see that, okay, the price out of this channel on the 4-hour chart, retest it here. Yes, we can use the swing 240 at this point. This is a low risk entry point. We can use the swing 240. We can use the TSTW24 at this point. Yes, it's out of the bearish channel on the 4-hour chart. All right, if we stop on the 4-hour chart, we use the 4-hour chart as our higher time frame and then switch to the first best time frame. Yes, we can do that. We can also use the swing 240. Yes, we can do that. Okay, no problem at all. All right, so now, so if you were here, you say this is the beginning of the first wave. It's not a bad decision, but following our guidelines, okay, again, as it started here, well, we can buy here, but this resistance here must be taken out. The resistance we point out before, I'll draw it again, my second pink line, is this one here. Okay, I'll color it in pink again, all right? Okay, must be taken, the first wave must break that resistance. But as it went above it, it quickly come down. Is it going to be a complex first wave? It may be, all right? Maybe it's not yet finished. Maybe it's going to be a complex first wave, so something like this. 1, 2, 3, 4, 5. Complex first wave. But the most important thing, are we buying at the beginning at a low risk entry point? If yes, that's okay. So somebody from the 4-hour chart in this scenario will say that, okay, this is the beginning of the first wave. But if the person push the curiosity a little bit far onto the daily chart, yes, on a daily chart, the first line that we draw, you can see that we need to be careful. So if, for instance, your decision to count that move from the 4-hour chart as a first wave, it will probably be a complex first wave, which we need to wait and see. But until the price goes above, that is the trend line on the daily chart, and also the resistance that we have seen on the 4-hour chart, we need to proceed with caution. But bringing us to the next point that I'm going to show you now, I'm going now to the yearly chart. Okay, Joyce, stay with me. And I know you want to count a wave, and some traders trade Elliott wave. That's what they do every day. And your decision, looking at the 4-hour chart, is not a bad decision, but you must proceed with caution. So what have I said so far? Do not use the 30-minute chart alone. Use different time frame. I know you have sent me also the daily chart. Great. But on the daily chart, we are still behind it. But in this case, all right, the first wave may be a complex wave. So you're going to go blah, 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 1, 2, 3, 4, 5. Will it be? We will see. We want to combine the technical analysis and the fundamental, bringing us now to the yearly chart. At the beginning of a new year, what do we do all the time? We draw the high, the low, and the median line of the previous year, 2014. The high is here. This is the horizontal line here. The low is here. Maybe you don't have a yearly chart. The high for 2013 for the Australian dollar, US dollar currency pair is at 9505. The low is at 8088. All right. And the median line, which I highlight here, is not the exact median line. You have to use Fibonacci retracement level to highlight the 50% level, but I just put it here roughly, but it's not the exact median line. So I will say to you roughly median line in the zone of 8821. So we highlight it. We can see that we are below the high and the median line. So, but now, because the price moves so far away from the median line, we are near the low. So at this point in time, because we are away from the high and the median line, our attention is now on the low. Okay, you see, beginning of the year, the price went a little bit below the low of 2013 and quickly bounced up. So what we will say at this point in time, all right? The critical level that we must watch for the Australian dollar this year, because the price near the low, is the low. But as the price, if the price start going up, the next target is the median line. So from this point onward, if we stay above the low of 2013, our next target is the median line. But we can also do another median line between the low and the median line itself, somewhere in the middle here, which we can also pay attention to. But so far, we are near the low of 2013. I'm going to color that low now into red, okay? So my red line is not equal to the exact low, because the exact low for 2013 is at 8088. All right, you can see that the red line is not exactly there, but the exact low is the 8088. All right, so this is the zone where you were looking at, okay, because the price now 8227. And also, I have used my Fibonacci retracement tool, you can see here. All right, from the low of 2008 up to the high of 2011, okay? So the price now at 61.8% Fibonacci retracement level, which is also close, very close. You can see the price D beginning of this year. This is the orange line here. Let me show you the orange line. That's the 61.8% Fibonacci retracement level of the range of 2008 to 2011. Okay. Now we can see my orange line on my daily chart. I will go to the 3 days chart. Here it is. You can see the beginning of the, you see this here is zoom. All right, we came near that level, 61.8% Fibonacci retracement level. All right, which is also in the zone of the low of, that's the low of 2000. I'll tell you, it's not exactly, but the exact low is at 80, somewhere here, 8088. So it's a support zone. That's what I'm saying to you. A bullish trend often starts from a key support and resistance level. So, yes, you are right to look for opportunity to buy at a key support level. But what you will do is to draw it on your chart and know which level you should watch. So if it goes below it, you know that the music has changed. But so far, as long as we stay above the low of 2013 and the price is playing high, lows are high, we must give it a chance. All right? We must give it a chance. But also, Fibonacci traders are watching the levels, okay, 61.8%. We have the low of 2013. But if the price dip below the low of 2013 and find a resistance, well, we can look for opportunity to sell. So do not be rigid to be bullish, or do not be only bullish or bearish, all right? Because we are at a support level. Anything can happen, okay? All right? So going back to the yearly chart, there's another level which the price retested here, using my own proprietary trading tool, which I don't share with anybody. The short-term equilibrium price level for the Australian dollar is at 8296. That's the level where you see this this week the price went to retest it on the dot, the peak line here, 8296. So for it to be bullish, it must go above the 8296, which is the short-term equilibrium price level. This level will remain in place for the next 2 weeks. All right. So the level you should remember, the low of 2013, that level, we don't want to forget it, 8088, all right? The next level that you must watch for the next 2 weeks coming out, 8296. It's a very important level. The Fibonacci retracement level, 61.8% on the yearly chart, Okay, that level is in a zone, I don't say exact level, in the zone of 7966. Yes, we are at a support level. It's good that you are looking for opportunity to buy, but the only thing that you need to watch is the trend line on a daily chart, which remain bearish. Even if you go to the weekly chart, you will see, let's see what's happening here on the weekly chart. If we draw a common sense trend line like this, okay, joining this point and this point, you see traders, we are on the edge. So it's a bit early to be 100% bullish. We are still, we can buy cautiously, but it's a contra trend. At this point in time so far, it's a contra trend. There's nothing I can say more than that because we don't want to fight the market pattern. Yes, we are at a support level. If you were buying at a low risk entry point, that's okay. But be aware that we are still in a declining channel on the weekly chart and also on the daily chart. The best approach, if we want to be truly bullish, we can allow other people to push it up, all right? Or at least on the daily chart, we want to see, okay, a rising channel, okay? So there's one developing now, but there are challenges which are the resistance ahead of us. We need to watch them, all right? So to summarize this video, if we want to count Elliott wave on a 30-minute chart, we don't want to count it on one time frame alone. We want to go at least 4-hour chart or daily chart. We want to draw the channel on each time frame, all right? So from the daily chart or 4-hour chart, then we go to the 30-minute chart, all right? Now, if we want to start counting the first wave, very often we start from a key support or resistance level. Yes, you have ticked that box correctly. You were looking for the first wave at a support level. Excellent. All right. Looking at the 4-hour chart, I'll show you, it looks like, okay, we are out of one channel, but there's another trend line ahead of us. If the first wave is going to be completed, it probably will be a complex wave. Talking about combining the technical analysis and the fundamental, something that you don't want to forget. This week, you see the mess that, the SNB, the Swiss National Bank, okay, they stop capping their currency against the euro, nearly put FSCM in bankruptcy. Another New Zealand broker went busted, okay, lost money, they are out of business. And we don't want to forget the economy news. This is what I'm saying to traders all the time. Keep eyes on the economy news and combine the forex factory. Check the economy news. And if you are counting wave, we are talking about a trend, okay? Before I forget, on the 4-hour chart sometimes, you see a tall candle like this on the 4-hour, I'm on a daily chart. Let's go to the 4-hour chart, okay? The same thing is true on the daily chart though. One tall candle like this, okay? One tall candle, 4-hour chart can be divided into 5 waves on a 50-minute chart. I posted a video on a 2-4 Elliott wave YouTube channel. I think that's it. And I was talking about a 50-minute chart and a 4-hour chart. If it's not that, I will look for the video and send it to you. One candle like this, very often on a 50-minute chart, can be divided in 5 waves. But this has nothing to do with the wave count in a proper sense, but we can play like that with it. One tall candle like this, bullish. You may see sometime on the 50-minute chart, maybe divided into, okay, 5 waves, something like this, bullish candle. So the purpose of using a different time frame is that sometimes you will see either on a daily chart, even monthly chart, one candle like this, okay, maybe divided in 5 waves on a 30-minute chart, and you will see it. Because the price, what is happening? How the thing is working? The price moving from one level to the next level. So by going from one level to the next level, if it's an impulsive wave, it will be divided into 5 waves. If it's a corrective wave, the minimum we want to see is 3. So 3 for correction, 5 for impulsive wave. But it's not all moves that are impulsive wave. Because when we are talking impulsive wave, we are talking about a trend. But when we are talking about forex, it's about the economy. We are comparing the Australian dollar to the US dollar. Right now, the US dollar is going up big time. Why? Because the Federal Reserve has said that they have stopped printing the dollar. So people are anticipating that soon they will put the interest rate up. As I said to traders before, as long as the dollar yen is going up, the general market is distorted. So far, we have seen one reaction from the Swiss National Bank, which has quickly stopped capping their currency against the euro. This is one implication of the distortions. All right. So the market is not, because we are expecting the dollar yen to correct itself for a long time. But you have to understand that the dollar, the United Kingdom the United States will not allow the dollar to crash as other people are expecting. They will never allow that. That will create havoc in the people's life. So for people saying that the dollar will crash, it's a madness. I mean, they will fight tooth and nail to defend that. That's why we see the dollar yen going up, but it's distorted. Talking about the Australian dollar, US dollar currency pair, from 2008, let's go back to the yearly chart, okay? We are now talking about the fundamentals, okay? So 2008 to 2012, in fact, the Federal Reserve was printing the dollar, so they were devaluing the dollar, so the Australian dollar was benefiting from it. So a lot of money were printed, and the money went to the commodity markets. So now that the Federal Reserve has stopped printing the dollar, or they say they have stopped their quantitative easing, okay, all this money that went to the commodity currency, like Australian dollar, they are coming out. That's why people are selling the Australian dollar. So the question that we must ask at this point in time, okay, does the selling finished? Okay, is it finished yet? All right, is it finished? If the Federal Reserve, a few months later, starts saying that, okay, the U.S. economy is not doing very well, we're going to do QE4. The game on. If they start QE4, the Australian dollar will start going up again, and, okay, the dollar will start coming down. So, at this point in time, as the Fed is speaking, all right, because if people start selling the dollar yen recently, market is distorted as long as the dollar yen is going up. All right, remember that. So when we are trading now, we need to be gentle. Before I close this video, the reason why I did not start recording video about analyzing financial instrument is that at the beginning of the year, the month of January is the preparation year. So I don't want to go now recording technical analysis for traders at the beginning of in January. We will wait until mid-February, and I will start recording videos as I did last year for the Euro USD, the dollar yen, to highlight key levels that traders, okay, must know. So that's why I'm a bit reluctant now to start posting this type of video, and I concentrate instead on trading strategy. As you see, I was recording series of videos recently about MACD, I just on your channel, and also on Elliott wave, why the first wave, okay, why the fourth wave should not overlap, okay, the first wave, why the third wave should not be the shortest wave, and I'm putting my concentration on understanding of trading for traders. But we will go deeper into technical analysis of financial instrument by mid-February, because the month of January, you see, people who rush into the market in January can quickly be wiped out by the middle of February. So you need to be gentle. Start the year gently. Mid-February, the market will adjust itself and start showing which way we're going to go. So far, be aware that this currency pair is still under pressure, because if tomorrow the Federal Reserve went out and start putting up interest rate, it will come down big time again. So we need to be cautiously bullish in this zone. It's not all set nicely. Gently for day trading purposes. Yes, you can use the TSTW24 in this zone. We are at 61.8% Fibonacci zone, and also a key level, the low of 2013. As long as we stay above that low, yes, but we have a short-term equilibrium price level, which the price went to retest already. All right, the price will bounce to return the short-term equilibrium price level, which is retested now, which is a resistance level. So watch the level, okay, that's a short-term equilibrium price level here. All right, the red, okay, the pink line here. All right. So this is just a quick video to clarify a few things for a TSTW24 trader that has contacted this week. As I said to you, Joyce, you want to contact me, go directly to my Gmail and okay, we will talk. But remember, when you send me email, it may take 1 or 2 days, and I'll get back to you, or we get back to traders. But I do not give a live day trading guides to traders. Never, I don't do that. Okay, and I leave it to traders to make that decision. And also that will form the character of trader. Trader become more independent. I know, yes, you have made the right decision at the support level. While you were looking at, yes, it looks like a first wave, but there is a trend line ahead of us. Do not count the wave on a 30-minute chart alone. Use a different time frame, break it down. You want to count the first wave will be at the key levels. Make sure that when you are counting the first wave, is he at the key support level? Yes, it is true here. We are at the key support level. Now draw the channel from the higher time frame. Yes, but it's not all clear now. Looking at the 4-hour chart and also the daily chart, we are still below a trend line. The price still in a declining channel. So it's not clear whether we should talk about a first wave at this point in time, unless it's a complex wave. But on the 30-minute chart, we can draw our line. Now we see the bigger picture here. Okay, if there's a resistance here, okay, you want to buy along this trend line here on the edge and be aware of the key level. The challenge is this level here. Will it go above it? Will it go above the short-term equilibrium price level and find a support? This will happen only if the market sentiment is bullish, the market environment is bullish, talking about the Federal Reserve and all the madness in the forex market. I hope you have learned something from this video and we put it to use, okay, to make excellent decisions. Do not be discouraged to contact us. Okay, that's how, okay, I do things. I'm very busy sometimes, but do not be discouraged. Get back to us. And the result is excellent video like this for everybody else. This is not a confidential video, and other traders may learn something from it. So this is what we want. Contact us. But sometimes traders contact me about Elliott wave count. I don't give wave count direction. There are other people doing that. I don't see the point for it. Trader at the end will find out which mistake they are making, what they should look for, and they will improve, okay, their wave count, okay? No one can do it for you unless you are, it's street you want to pay for it. There are other people charging people for wave count, but at the end of the day, it all comes down to the market pattern. Is there a trend, all right? If there's a trend, the pattern, higher lows, higher high, okay, or lower low, lower high, and we will see the pattern. The price went down, consolidation, breakout, resistance on the left-hand side. This is the guideline that we follow. Thank you for contacting us, and thank you for your patience. And if you are upset with me, just shout and say, Joe, you are crazy, you are useless, or something like this for a while. And okay, and we stay friend later on. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about how to count a wave on the 30-minute charts. Speak to you soon.